So should you do Bitcoin mining or buy Bitcoin directly? I think that's a question a lot of people are asking these days. And my friend who's here today, Eng Taing, has basically done something with Bitcoin mining. I think you're going to find really interesting. And I think there's some interesting things about it that make it a lower risk profile in some ways than buying Bitcoin directly. So you're going to enjoy it. Eng, how are you today?
I'm good. Thanks for having me.
Really excited to have you and talk about this. I've full disclosure, I've been in the past a little uh, negative on crypto just because of the volatility and for some of the other things. But this is really interesting to me because there's a gold rush going around crypto. And if you look back traditionally at the gold rush in America, the people that really made a lot of money were the people that sold picks and shovels. So I look at what you're doing and you're kind of supporting and providing that. And it's really unique. So maybe just tell a little bit about kind of the difference between Bitcoin mining and investing in Bitcoin directly, or kind of some of the things that you're working on right now.
Yeah, I think the simple answer for Bitcoin is if you're a believer in Bitcoin, you want to hold as much of it as possible. You're not really looking to sell long term. And so you could put $60,000 in buy one Bitcoin, or you can invest that $60,000 into Bitcoin mining, what we do, and get 1.5 Bitcoin. So I think it's a better bet overall.
Yeah. So how do you get more Bitcoin when you don't buy it directly? Like, how does that work?
Yeah, so Bitcoin mining is the process of essentially validating the blockchain nodes and validating transactions, and it's very integral to the blockchain. It secures the blockchain. It's what keeps it running, and these miners get incentivized through these block rewards. So a lot of technical stuff, but basically means when you plug in the computer, a powerful Bitcoin mining computer, you get potentially Bitcoin. And depending on how much you pay for that computer and how much you pay for the power, that will be how much you get, what your ROI is for in terms of how much you pay for a Bitcoin you mine.
Right. So now with Bitcoin mining, a lot of us maybe that aren't as familiar with it. I mean, this is, lots of electricity. There's these data centers, and you guys actually run these data centers, and you also lease out space to other groups. You have a fund. You've done this with over $100 million. So maybe that's a loan, or maybe it's far more than that now, but you've been involved in this world for a long time. You're well educated. You've worked at Apple. You've done all kinds of things. So what's can you just kind of educate people a little more on kind of, okay, the Bitcoin mining process? How do people really get paid through that? Is and maybe you just kind of talk a little bit more about how people make money when they invest in this type of asset.
Yeah. So last month, around $1 billion of Bitcoin was mined. That's around what it will be this month. Every 10 minutes, 6.25 Bitcoin is released in what we call a block reward. And that's given to a lucky computer or a miner that guess a number. And that's the sort of simplest form of what I'm trying to say. It's called proof of work. Essentially, it's guessing a number, and it's a very random process. And so to get out this randomness, you have to join a pool. A pool is an aggregation of a lot of computers, Bitcoin miners, and they get a portion of it. So if I plug in my machine, I know exactly how much computational power I get a fraction of a Bitcoin. And so that is given every day because every 10 minutes, a miner gets reward, and then they take the average of it and give it to the miners. And so you get it every day, and you get into your wallet. And over a course of a year, you have recovered your return on investment, and then it's all profit from there.
So the interesting thing about what you do, Ing, is a lot of people think, okay, if I'm going to do Bitcoin mining, I've got to set something up in my garage or go buy a warehouse or something. But you actually have a retail fund for investors that this is kind of what you've traditionally done. So you'll basically, obviously, economies of scale, you'll get together, you'll have these data centers, and they're not in California, I'd imagine. Like, we live in California, they're probably not in California because power is much cheaper elsewhere.
Mhm.
And basically, by pooling all this together, you can really compete with a lot of kind of the big finance that's doing this too, because there's a lot of money going into this, right? So are you finding that it's getting more competitive when, like, there's more groups that are actually doing Bitcoin mining?
Yeah, it is getting more competitive. And that's the potential issue we face in the future. Right now, we're looking at 80% profit margins and very profitable to mine Bitcoin. In a year, more than double potentially. Competition will double, and that same number of Bitcoin, 6.25, will not double. That will be the same. So if the competition doubles, you make half as much Bitcoin. Now, typically what we see is that if it increases that much, then you actually see a ramp up in prices. So that's why, I don't believe Bitcoin will be static in price. It will go up in general. And so you get that great economy of scale. So then you have to figure out how to scale everything. So you get low cost of power and cheap hardware, and that combined for very profitable Bitcoin mining.
Right. One thing that was really interesting when we talked earlier, and again, we're not pitching any investment on this show. I just think it's really valuable. Mailbox Money Show, we talk about different types of investments so people can understand them. They can understand the risk profile. What are the returns? What are the pluses and minuses and things like this? So this is something that, it's a little different than other things that I've seen, but I really liked a number of things about it because, if you buy a Bitcoin for 60,000 at the time of this recording, if it goes down, you lose money. And if it goes up, you make money. Well, this Bitcoin mining, you were telling me it's a break even at just around $8,000. If Bitcoin is at $8,000, you're still slightly profitable, or you're still kind of in the range of profitability, which is amazing. So if people if Bitcoin goes way up, you're obviously people make way more money. If it goes down, even if it's 20% of the value that it is now, you still would actually make money in this type of thing, which is really unique. I think it's unique to have something like that that's really well. And then as if Bitcoin does double or triple or it goes up higher, you're able to make more on that as well. Can you talk about maybe some of the other advantages? I think there's some tax advantages to this as well, and some of the other advantages of this type of structure.
Yeah, I'm a real estate investor as well. I think real estate has a lot of great tax advantages. It's an income producing asset. Computers are income producing assets if they mine Bitcoin. Amazon in 2019 paid zero federal taxes, and they did 85% of that tax reduction through depreciation. They depreciated their hardware, their miners, not the miners, their trucks, their warehouses, and the data centers. It's all the same thing. We put nearly 100% of the capital into computers and data centers, and we depreciate 100% of that upfront. So a huge tax break for other potentially passive income investments that you have earned, so you can defer your taxes.
Yeah, that's amazing. I think it's similar to other things. Yeah, you can depreciate the equipment, and you do get some depreciation benefits on that as well, which, one of the biggest ways to make more is to pay less on taxes. So that's something we talk a lot about, is not only making more on your investments, but reducing your taxable, investment income, as well as if you can reduce ordinary income, which there are some things you can do that with as well. So talk to us a little bit about, it's interesting with crypto as a whole. Like I mentioned, I haven't been super pro crypto, but crypto is here to stay. It's here. Blockchain's here. Blockchain in real estate, blockchain in all sorts of different things, NFTs. It's here. And personally, I wonder if it feels, and this is just an honest opinion, it feels a little bit to me like the dot-com bubble, where it's like the technology is here, it's lasting, but there's a lot of crazy stuff kind of happening within it. So and you're a smart guy. You went to Wharton, you worked at Apple, you've done all kinds of stuff. Like, you're a super smart guy. So talk to us a little bit about just the crypto technology and why you think that crypto will be worth more in the future than it is right now, or particularly Bitcoin, and maybe how it's different.
I think the advantage of Bitcoin is that was the first, and it's been so widely adopted. When you have a lot of essentially rich people and institutions wanting to buy Bitcoin at certain prices, you have a floor. So you can't really go below that, because people just have vested interest in making sure that floor goes up, just like art. It's a property. So you want to make sure that value goes up over time, especially if you're an institution like a bank or Mass Mutual, who's putting money into it to replacing the balance sheet. The other part of it is, I am a technologist. I love the technology of blockchain. I think the government, all kinds of new technologies would be using blockchain. For example, even for our real estate, you could use the blockchain technology to track residents coming in and out. This is actually a better way to track data using these blockchain technologies. It doesn't have to be Bitcoin, it doesn't have to be Ethereum, but the underlying infrastructure of the blockchain, the decentralized data where you use miners or whatever it is, computers, to validate things and nothing can be hacked, is essentially the crux of why I think crypto, and I think it's a misnomer to call it cryptocurrencies, will be a future application that you see widely adopted on every facet of how we use daily lives.
Yeah, yeah, it will be really interesting to see. And there's some people that believe that cash is going to go away, or the central banks around are talking. I know China's already doing a central bank digital currency. Do you think that that potentially has some risk to destabilize something like Bitcoin if the U.S. I mean, China, I think recently just said, hey, no more no more Bitcoin, no more cryptocurrencies. And so a lot of the mining was happening over there.
Mm-hmm.
Now it's not, not at all, but supposedly I'm sure it is happening in some places. But is that a concern that you have, that somehow, maybe some of the anonymity and stuff that was kind of first presented with crypto, that, like you said, now it's almost used as information for the government, that they would love to be able to have more control over the monetary system?
There's two aspects of blockchain technology. One is the transparency layer of it all being public ledger on the blockchain, which means that if you send me one Bitcoin, it's publicly knowledge and no one can change that fact. It's no central authority that can change it. The other part is centralization. Decentralization is essentially why people love Bitcoin. You can't go and print $2 trillion of dollars in fiat currency. You can't print more of this stuff. You can only mine a certain amount. It's 6.25 every 10 minutes, and it'll happen for another 120 years. That's it. 19 million Bitcoin has been mined, 21 million available. And that's just Bitcoin. Other things are essentially codified in code that can't be changed by central authority. People love the fact that no madman or authoritarian or anything benevolent figure can just change things at will, because it creates uncertainty. People love investing in certainty. Bitcoin can be seen as a potential destabilizer of fiat currencies, of the dollar, of the renminbi. And I think they want control, right? They want to be able to make the dollar valuable. And for a lot of my friends, libertarian leaning friends, they like the fact that they can travel anywhere with it, that it can be accepted anywhere. There's no authoritarian or authority central bank that can print $2 trillion of this, or whatever it is. I think that has a lot of just attractiveness to a certain type of people. I think for the US government, they are looking to embrace cryptocurrency at large, maybe not Bitcoin specifically, but lots of states like Wyoming and Texas are actually embracing Bitcoin mining. I was actually just in Kentucky, where I was talking to a state senator, and he's trying to replace a lot of what was coal mining jobs with Bitcoin mining jobs, because essentially he's taking power and technical talent and then creating a value that can be done anywhere.
Wow, that's really interesting. It's obviously, looking back 20 years from now, we'll see, okay, these trends were happening and here's the way things actually went. There's obviously behavioral things that we can't predict. But it is interesting, with all the, we talk about this commonly, that 40% of all the currency that was created in the last 18 months. And there's so much, I mean, it's just out of control. It's out of control spending, right? It's everywhere. And so I think it's really important that people understand about crypto. And also, I mean, I also invest in precious metals. I like precious metals, but there's advantages to both, right? I mean, I kind of wonder with Bitcoin, well, what do you actually own? You own this code on the, you own something, you own a digital asset, versus, gold and silver, you own something that's more physical. But it is hard, I mean, to transport gold and silver. It's hard to travel internationally and do that. It's hard to transport. It can be expensive to store it. It could be, it could get stolen. And I know that can happen with crypto as well. But how would you describe, because again, in the past, we had gold and silver, particularly gold was the monetary system for hundreds of years or even thousands of years, going back to, ancient, just many, many ancient times. So how would you compare, something like Bitcoin to gold?
Mm-hmm. I studied economics at Wharton, and one thing that we've studied is what happened when we got off the gold standard, and when Nixon took us to the gold standard. A lot of economic volatility happened, and if you see in every country where there's hyperinflation and inflation, that causes a downward trend of those civilizations. That has happened time and time again in memoriam. Bitcoin is digital gold. Digital gold is interesting because it's digital. We care a lot more about digital self than any time ever, and we will care more about it. If you have a blue check mark in Instagram or Twitter, that has significant value, but that's just a digital representation. You would pay, if you want to be an influencer, hundreds of thousands, if not millions of dollars, to get that digital representation. And with cryptocurrency, you can make it authentic. it's so interesting that you can copy paste and download to your computer, NFTs, whatnot. But because of the way that the code works, it can be authenticated in a one-to-one fashion. And so our digital selves is going to be how we represent ourselves in the future. Digital gold is very interesting because I like having gold as well. It's a great store of value over time. You can pass along to your heirs and whatnot. And while gold has a longer lifespan, it's also hard to move in and out, right? You can't carry $1 billion of gold with you. You can't just send Bitcoin to somebody across the country or across the world.
Mm-hmm. Yeah, yeah, no, it does. It's interesting the how it works. It's yeah, it's just I think when money printing happens, I'm just really curious to see what will happen sooner or later. There's a guy named Howard Marks that talks about the pendulum, right? There's this pendulum that swings back and forth with the market, and we're just so far this direction where they're just doing everything they can to stimulate the economy, keep it going, and then sooner or later it's got to swing back just as far the other way. So when that happens, what happens to stocks? What happens to single family real estate? What happens to crypto? What happens to all these assets? And I guess the answer is we don't know. But I think it is really important to at least get familiar with crypto, understand how it works. Even though I got a book on crypto once, it was 300 pages, and it felt like trying to read the matrix numbers. It was so like code speak. But a lot of very smart people really seem to believe that it's here to stay. And like you said, you're somebody who's in the inside, really looking at this on a detailed level. Um, so I guess, yeah, talk to us a little bit more. I guess a lot of our audience is familiar with real estate. So how would so like what you do, it's structured similar, like you syndicate this and you
Mhm.
kind of it's like a fund kind of a thing, but what are some of the other ways that this would be similar or different than investing in like a multifamily syndicated deal or something?
Yeah, so I'm actually a real estate investor. I love investing in real estate. I invest in syndications. I am an LP. I'm a GP sponsor as well. I made this fund to be very familiar to real estate investors because that's who I am. I wanted to be very familiar. So for the investor, you sign a PPM, you sign an operating agreement, same thing as you do with syndication deal. You join in an LLC, you own a pro rata share of the profit interest, and you get a K1 every year. All the same thing. And if you don't care about Bitcoin at all, you could just take it in cash. And right now, our payouts are like 10%. Right? At 35K, we were on 7% a month. And now it's like better than that. And it'll be volatile, but 7 to 10%, pretty good a month. But if you care about Bitcoin, then you do set up a wallet. We help you with set all of that. It's not that hard, but everything else is all very familiar. You get a K1 that will have a bonus depreciation. You'll get, we'll do all the taxes for you on our end. And it's just how much do you get in income, and it'll be fairly easy, just like any other multifamily investment.
Yeah, it's interesting. You say 7 to 10%. That's typically we give that for annualized numbers. You're saying in a month, that's where you're at. Again, we're not pitching this investment or any investments. I'm at the time of this recording, I'm not invested in this. I may choose to in the future, but it's interesting because the Bitcoin price right now is highest, or it's pretty high from where it's been. There's a lot of belief that it will go higher. Some people say it will crash. I mean, we don't know where it will be, but it's really important that we get educated as investors, or I get educated on things that are outside of my wheelhouse, because in different economies, different markets, things change and they look different. So that's why I think this interview is really valuable. So yeah, so I guess let's talk about that for a minute. I think for a lot of people, it's hard to get. Well, I will say this first. I met a guy recently. I went to it was an event with some real estate friends, and it was like a shooting event where you get trained on how to, defensive handgun training. So you come out, you're better trained than a lot of law enforcement. And I've never really done that. Anyway, it was interesting. But I met a guy there who was since 2016. He basically sold his house, and he has 100% of his net worth is in Bitcoin. And he just so believes in it to the point of, and I said, what if it crashes 90%? And he's like, it doesn't matter. It doesn't matter. He's so committed that he believes in it so strongly. And whenever you see something like that, you see people that are just they believe in it. And obviously he's done very well. But I guess I've found myself being kind of resistant to it because it feels like, oh, it's new, or it feels like, could this be a bubble? Or now there's thousands of cryptos and there's some with dogs on them and cats and who know what, there's all these different things going on. So I guess what are some ways people can start to get more comfortable with just understanding crypto or understanding kind of Bitcoin and how that works?
I would say as simple as, watching a YouTube video on how to set up your wallet. Set up a wallet, see how easy it is to actually send $1. Then you realize, why the heck was I working with Chase or Wells Fargo? I can go and put my Bitcoin on a decentralized protocol, wrap it, and then borrow against it. And I can do all that in 20 minutes. And I can borrow, and I have several $1,000,000 of Bitcoin. I could borrow a bunch of that, 50% of it, at certain percentage returns, and I can pay it back all instantly. It's wild. And that's essentially replacing all of our current institutions with this decentralized application layer of how technology will work in the future. So I'm going the deep end here, but there's a layer of this that it just will be familiar. I think when you think about everyday life and use, you'll see it being replaced. The banks are going to be adopting it. The way that you buy a house will be adopting it. Title and escrow changing to smart contracts. All these things are happening. I know for sure they are. I see legislations coming in the pipeline. I think for folks who want to get familiar with crypto, start small. I'm not advocating to invest in Bitcoin mining. I'm not advocating to invest in Bitcoin specifically. I actually like Ethereum and other crypto. I'm advocating that if you see so many smart people, I believe, get into this, you must think like, okay, what do they know, right? And then all these sports talents, actually young generation, are now taking all their salary in Bitcoin. Odell Beckham announced today he's going to take 100% of his salary in Bitcoin. And while you maybe don't believe in Odell Beckham and his wise ways, he's not the first of this generation. This generation will be crypto natives, which means that they will want crypto, and they're going to get a $2 to $3 trillion of assets in the next 20 years from the baby boomers inheriting. And they will want to plow their money into crypto because that's how they're used to in changing life. They're not used to going and asking for a loan. They're not used to doing this and that. They will be used to a certain speed and scale that I think crypto can only provide.
Yeah, no, that's really it's really interesting, to watch behavior trends and just as people understand it. Like you said, a lot of younger people are more familiar with it. And yeah, I think it's for me, it's important to just continue to educate myself. And I think there's a lot of people that are watching or interested. They're just saying they're kind of watching and seeing what's happened, but how can I be a part of it in a way that just feels a little safer? It feels a little different. And so I would say also too, there are sometimes events, so there's people you can talk to, even at real estate events that are doing crypto. But also, I would also say just continue to educate yourself, right? Continue to educate yourself and just, be aware of the risks. And, this is, the guy who puts 100% of his net worth into Bitcoin. That might be, I don't know, for some people that, the volatility of it to me is kind of the part that I've said, oh man, I don't know if it crashes another 90% again, which has done multiple times, which could happen, but then it bounces back. So awesome. Well, any other tips that you have for people when it comes to understanding, kind of, I guess, the difference and just the benefits of Bitcoin mining versus buying Bitcoin itself?
I think touching base on your friend, put 100% of the money into crypto, Bitcoin specifically, I would probably feel the same reaction if I had a friend put 100% of the money into dollars. It's like, what are you doing? Invest that, put that something else, right? You're losing value every day. So in terms of understanding Bitcoin mining and saying, I think I'm trying to create a very familiar investment. You could invest in Bitcoin mining by buying public companies, right? Blockchain, Marathon, these are publicly traded billion-dollar plus companies. They have great scale advantages. They have higher overhead, but they will never give you any Bitcoin. They will only have a share price that will go up and down based on how much they mine and whatnot. And you can sell that like any stock. I like yield producing assets. Bitcoin is actually intrinsically just a yield producing asset. Just like rent, just like rental incomes, you put scale and capital into it and you can create yield. And as long as you get that yield, you will be, I think it's predictable, it's current, it's fast. That's why I love Bitcoin mining. You could even just buy your own miner. You can set up a program on your MacBook or whatever computer and make just a little Bitcoin. It's all possible in today's digital age.
Yeah, no, that's awesome. Well, I just want to really appreciate you and honor you for coming on the show today. I think you're a very well educated guy, and you really do a great job of explaining kind of the difference between these two types of things. And I think it's important. It's important to look at kind of this gold rush that's happening and to take advantage of it and in ways I think that are a little bit lower risk profile than other types of, investing. So I appreciate you sharing. How can people connect with you if they want to reach out to you?
Love for you, everybody, to jump on our website, Touzi Capital, TOUZI, capital.com. We have lots of opportunities for investments, and I do weekly or biweekly education webinars on all things crypto and real estate investments and leverage. These are all things I believe in. I do myself. I'm an investor first. I think like you, I want to build generational wealth. I want to build lasting passive income. That's how I've been able to retire from my 9 to 5, and which was a very lucrative 9 to 5 at Apple. And now I am just advocating. I want people to just be familiar, know your options, know that you have more options that you might not be considering, and just learn. I think that's something that I know Bronson and I are both very big advocates of.
Awesome, Eng. Well, thanks so much. I hope everyone will reach out to Eng. And thanks again, Eng. We'll look forward to talking to you again, hopefully soon.
Thanks a lot.
All right, so it's apparent Eng Taing is the Bitcoin mining whisperer. He does some amazing stuff. Hopefully this was helpful for you to understand how Bitcoin mining works and just how to invest in the infrastructure. And I think that's something that's really important to note, is that this is not actually investing in Bitcoin. It's kind of something peripheral around something else. And like I mentioned, the gold rush that happened, the original California gold rush, it was the people not necessarily that were mining for gold, it was the people selling picks and shovels and hotel services and food services and Levi's and all that stuff to miners that a lot of the people were making money. So sometimes it's not the actual asset itself. And there is a gold rush that's happening right now in crypto, at least at the time of this recording, but it's the other things around it. So something to consider, something to look at. I love looking at things that are a little bit different. And again, educating yourself is the best investment that you can make. So anyway, I hope you enjoyed this. And again, we're going to go over more new asset classes. We've got a bunch of amazing stuff lined up, a bunch of amazing individuals we're going to interview on different types of asset classes, different things that are available. But thanks for taking the time to educate yourself. Look forward to seeing you on the next Mailbox Money Show.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.